And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family, friends. It is time for the market prep. Friday, March 31st, last day of the month, last day of the quarter. Keep that in mind today. As always, our focus is going to be on accurate context, finding good risk management levels, and always remaining patient in our trading this morning. I'm hoping that you are doing well, that you've got the markets going your direction if you're already in the markets. This morning's economic numbers, the 7:30 PCE numbers came out. Now, all of them lower than expected. That, I think, is good news. The Fed is watching this, of course. If they believe that they've started to slow inflation, maybe they can slow down some of the rate hikes. So I think the markets are liking this. They're ready to open a little bit higher this morning. The only one that was higher was personal income by, 0.1% higher than expected. The GDP in Canada also came out, 0.2% higher than they were expecting. We're still waiting for the consumer sentiment, Michigan consumer sentiment this morning, which may or may not be an impactful number this morning. So again, we've got stock indices looking steady to higher this morning as we get ready for the open. They're on a good pace here to have the third higher weekly close for 3 weeks now. So we've been coming off those lows. It seems the banking situation has calmed down a little bit. So we're going to be, with a large probability, closing this week higher again for the third week in a row. Crude prices remain firm this morning ahead of next week's OPEC Plus meeting. Other than that, what are we looking at as far as talking Feds? We have John Williams speaking, but not till after the close. Lisa Cook also speaking. Those are the only ones that I'm seeing on the calendar here this morning. So we're not going to have the benefit of any of their yakking. We got Williams, Waller, and Cook all speaking after the close today. So we are going to be on our own looking at what the markets are telling us, and we're going to take a look at that very shortly in the charts. If you were able to attend the session yesterday with Jared Tendler, we hope that you enjoyed it and we hope you learned something. Jared is a context expert, and we really enjoy having him with. I had to stick a couple of questions in myself yesterday. If you did not attend it, it will be up on YouTube within a day or two for you to absorb. We'll have Jared back again sometime next month. Always enjoy having him with us. And I think this week has been a very good and productive week in group coaching and Make Hogue Money. We made money every day this week in Make Hogue Money. That's a good thing. And it is Capital Preservation Friday. No Make Hogue Money, no group coaching. This is it for the week for me, is the market prep. And if you are still in the market after noon in the pit, we used to say that anybody that was still working on Friday afternoon is down money. So make sure, preserve capital, get an early start to the weekend, rest up, and be ready for next week as always. VIX this morning up slightly, 19.19. It was at 19 even yesterday at this time. The dollar index is right now off its monthly low. It is 102.43 last I checked, 102.28 yesterday at this time. And the yield on the 10-year pretty much the same, down slightly. It's 3.53. Was 3.59 at this time yesterday. Alrighty, so as always, don't forget, make sure you hit that lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep, Market Reflection, everything we do here. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Good morning, everybody. I got George. Good morning, and Lacey, the center of the universe, is currently barking at the front door. We got our painter coming in again today. I've got a new background. It was delivered yesterday, and I'm afraid I've bitten off more than I can chew. It is a pretty large bookcase. It weighs about 400 pounds, so it's going to be a lot of fun to try and put that together and put that in its place. But we'll get to that. Got all weekend to worry about that, and we'll see what it looks like on Monday. Good morning, Shaw. Capital Preservation Friday for sure. Timothy, good morning. Randolph, my brother, love you. Rick, maybe you can come down and help me put this thing together. Chris, good morning. John, Will. It's okay you don't have to hate gaps, but it is telling you that there's more to learn about them. I don't mind gaps because they give us reference. What about the gap in the S&Ps yesterday that closed to the tick? When you get a gap, it's all about when it does close the gap, does price re-accept the previous day's range, or does it reject it? Yesterday, with very cheap trade on the gap close to the tick in the S&Ps before they took off to the upside. We'll take a look at that on the charts very shortly. So you don't have to hate them. Know that there's more to learn about them. Stephen, good morning. Marcelo Scottson, he conquered. Marcelo, Will, good to see you. Terry King, Bill Phillips, Robert Harrison, Henry, Shy T, happy Friday to you. Mexcalibur, good morning. Henry G, Jason. Yes, it's hard to trade anything, right? This is not an easy thing to try and do, but it is deeply gratifying and hopefully pays you a lot when you are right? Jason, good morning. Rusty Golfer, my spirit animal, is here. Good morning, John. Good morning, Travis. Good morning, Sarah Hall. Prayers and love to you. Happy Friday to you. Pete, good morning. Vince, my guy, good to see you. Nice trade yesterday. Haggle Matters. Sujit, JT, good morning. And good morning, Madam Blue. I was looking at some Instagram shots of some Indian ringnecks. They're so cute and smart. Trading Research, good morning. Data F Trading. CDS, GDP Canada up. Let the maple syrup and Molson flow. In the Great White North. Jay, good morning. I'm for reals. Trading Research. Alejandro, good morning. Kevin. John Walkowiak. Yes, I certainly do need help lifting that beast, John. You got that right. I'm going to be bringing it into the house one piece at a time. Pagel, Rooster, it's all right. You're not late. You're here. That's the important part. Rob, Renos, Serda, good morning. Sorry, Certified. There it is. I figured that out. Cool name. Thanks for popping in and saying good morning. Don't know if I've seen a couple of these names. Joseph, good to see you. It's always a pleasure to see everyone. And again, thanks for popping in and saying good morning and let me know you are here. I'm going to take a look at the charts here in just a second. We're going to start with the S&Ps. Here we go. Let's have a look. Okay, so third week in a row, we're going to be closing higher with high probability, right? I mean, we'd have to really take this thing apart to have the market going lower. Stocks COVID-19, good to see you. And Dimitar, good to see you as well. Trading for Animals, good morning. Lee Trevino, the famous golfer, is with us this morning. All right. Open interest estimated another 22,000 new contracts on the way up yesterday. So is the auction process doing well? Well, volume hasn't been all that gratuitous to the upside, but that doesn't surprise me. The S&Ps usually don't bring in huge upside volume. It's when the downside comes in when you see the big volume and the volatility. So looking at the open interest yesterday and the day before, we are seeing buyers coming into this market. There is interest in buying this market. The auction process, I'm giving a B minus. A B minus. Why? Well, I'm a little bit concerned about the volume, but I don't think by any stretch that it's a game changer. We do have some weak structure down below. We know in the S&Ps we've got 3 weak lows down there. We've left a gap down below also. Those will be important when they're important. We've moved considerably higher this morning. There is always the concern of some profit taking coming at some point. Just be careful. And if you do catch a move in the opposite direction, you may want to be reasonable with your profit targets. They can happen fast. They can happen wicked. Those pullbacks. So the PCE, well, the market seems to initially like it. End of quarter also, we may see some adjustment in inventory and some possible profit taking. I mean, let's see here. This is the 10th. The 11th, we put in the low for the month. We're putting in the high. No, we're not putting in the high. The high was here, but we're getting pretty close to it. Take a look at the 30-minute chart here. Trading futures daily open interest is provided by the exchange. Let me get through this chart, and before we move on to crude oil, I'll show you where you can find that information. So here it is. Here's yesterday, day before. We had a lot of long overnight inventory. Finally, yesterday we did have a gap closed to the tick. No acceptance of the previous range. The market turns and heads higher. The closing price, well, settlement 40.80. Overnight inventory, we're looking a little bit longish. We're looking like a possible gap. Okay, and that gap does give us reference, even if we don't like them. It says, well, if price is opening above yesterday's range, it may actually accept above that. So if we open with a gap, that's why we say the gap rules are if we can't close the gap, or even if we do, like yesterday, we're looking for opportunities to trade in the direction of the gap. It's upon acceptance of the previous day's range where that rule no longer stands. Here's the TPO chart. I'm just going to show you. Here's that gap close yesterday. This includes the overnight. Let me give you the one without the overnight. So here's the gap that we left. Here's the gap that we closed yesterday to the tick. The market turned around, and now it looks like, again, we may open with another gap to the upside. 41.10 is weekly kickoff high. That's going to be all the way up here. 41.10. And was a normal variation day. The upper extreme of the initial balance was the high of the session yesterday. We do have a little bit of excess at the high here, but again, if we're opening above that excess, it's all about acceptance. Normal variation, neutral type of day, nothing great. One thing we do want to point out is we have another, we had one yesterday that got taken out in the regular trading hours. When the market puts in a new recent or all-time high or low in the overnight session, the regular trading hour session will usually exceed that level at some point, maybe that day, maybe within the next couple of days, but the market doesn't like it when there is opportunity to trade up here that is not available to the longer time frame. I don't know what it is. Maybe it's the regular trading hour session has an ego and says the overnight is not going to outdo us. Whatever it is, there is that tendency. We saw it yesterday. We opened, we took out the recent high that happened in the overnight just by a few ticks yesterday, ended up being pretty good trade location. We took a short up against this. And we had maybe an 8-point profit yesterday in make whole money, but we ended up actually closing the gap to the tick, finding buyers down there, and then moving higher. So where do you get the open interest information? Here it is. Here's where I get it. So if you want to just bookmark this link, I have to get the link first here. Hang on. If you want to bookmark this link, what the heck? Copy. Paste. There it is. So this is what you're going to see when you click on that. This is the CME Group Daily Bulletin. It's got all the CME Group products on it where you're going to be able to see volume, pricing, open interest. So when I'm looking at the S&Ps, here's the equities. This is the preliminary sheet from yesterday. Everything on this is going to be right most of the time, except for open interest. It takes the exchange more time to calculate open interest. Open interest is the total number of contracts that are outstanding. One long and one short equals one contract. So there's 2,189,141 longs or shorts. Takes two to a party to make a contract. So looking at this, overall, I'm always looking at the total down here, 21,868. Now that's likely to change around 9:30. They'll come out with the final numbers. Those are the ones that I record. But when we think about the auction process, volume is the driver of price. Open interest is how good the auction process is doing. So, but if I'm going to be looking like at crude oil, look at all this open interest out into the future. I mean, we're out to December 25 here, and we're still seeing a lot of open interest. That's why when I gauge volume, I'm gauging the total number down here. Okay, this is the total number of contracts of all months of crude oil. This is the total open interest of all of the months of crude oil. Okay? So that is where we get that information. And there is more information for you to learn about open interest. And we'll do that during group coaching. If you can come to group coaching, that's a good place to do that. And we can talk about organizing and using that information to be able to be more accurate in context and gauging the auction process. All right, now let's move on to crude oil. Trading futures daily. Hopefully that's going to help you, at least at the beginning of your journey in understanding open interest. Open interest is like if you could compare it to something in stocks, it's total shares outstanding. But total shares outstanding in stocks it doesn't change that much unless there's a split or a buyback, something like that. The open interest in futures changes every day, and understanding how that relates to the auction process, again, can be really helpful. So crude oil, a positive week, second week in a row. We had a little bit of a sticky spot there down at 73, the weekly kickoff level. We've left it behind now. We added 12,000 in open interest yesterday. Volume was, again, not all that gratuitous, giving the auction grade a B, because we are pretty much moving higher. And now we're back up above this trend line. This whole area here was kind of critical. And if we can reaccept above this trend line, the destination is this trend line. Okay. So we're looking to see if we can show signs of acceptance. What is acceptance? Well, you can have acceptance through time. That's one of my favorite ways to gauge acceptance of price. We stay up above this level, we close up above this level, this is going to mark a degree of acceptance. The market may pull back. We don't know what's going to happen here. So here's the 30-minute chart. We've got overnight inventory to the long side. We've opened with a gap. We have not closed the gap. We've checked to this naked point of control. There's several more above the market where we can see visual targets in those naked points of control. So again, with the gap open here in crude oil, if we can't close the gap relatively early, I'm going to be looking for opportunities for this market to continue to move higher. It's added open interest yesterday. The value area, these red areas here, have been moving higher relatively consistently. But again, if we do close the gap and we show acceptance inside range and value from yesterday, that's when I'll look for the market to pull back to the value low from yesterday's session. All right. So here's the TPO chart. Little bit of a possible late spike yesterday. Well, we've opened above. There wasn't a lot of time to show acceptance in this area. So opening above it is one of the higher probabilities of acceptance of higher price. The base of that late spike, 74.40. Now, is it a true late spike? Because we closed at 74.37. But again, it's a late move that didn't have the time to show acceptance in the day time frame. Opening above it, higher probability of acceptance of higher pricing. Yesterday, normal variation day extreme. The upside extreme. Showing buyers won the game yesterday. And those buyers were creating new positions with the increase in open interest. That's one of the ways we gauge the auction process. Money is still coming in on the long side here in crude oil. Take a look at the NASDAQ. I have a pond back behind the house. My new office, I can hear the ducks quacking back there. So whenever I say NASDAQ, it sounds like Aflac, but because I keep hearing the ducks back there. All right. Swede, nice job. She passed the 150 combine yesterday morning, doing no part to the market prep. Oh, thank you. Well, you've learned a lot, and it's showing, right, Swede? Big Swede. Nice job, man. Thank you for letting us know. Man, I love to hear the stories of successes, levels of success. Great job. Congratulations. We're looking forward to your continued success. So here's the NASDAQ. Okay, weekly kickoff high, last week's high, obviously in play today. There's bound to be a couple of lunkers in here, a couple of nice big walleye here somewhere. Direction, just the importance of this level, the swing high here, last week's high, weekly kickoff high. Everything seems to be focused in this area, and we're starting to see the market continue. And we have, again, put in a recent high, even a higher high than the S&Ps. I mean, when's the last time we were up here? I'd have to go to the continuation chart. Last time we were up here, August of last year. This is a new recent high, as we were discussing. The market doesn't like that to happen in the overnight session. So we have the 30-minute chart here. settlement here above weekly kickoff high, marking possible acceptance through time. We never did close the gap in the NASDAQ yesterday. We've got a naked point of control going right through that gap. There are weak structure levels down here, naked points of control, area gaps that haven't been revisited, but that ain't going to matter if this market continues to bring in money to the long side, and there's a lot of money out there. Okay. Gap, no gap, doesn't look like we're going to be opening with a gap necessarily in the NASDAQ, but the NASDAQ has been much stronger than the S&P. Makes sense that it's, maybe slowing down a little bit to the upside. Giving the auction process here in the NASDAQ, look at the daily again, a C. It's only getting a C, a bouncy C, because we're just at the upper level here where we've been kind of range bound. So I don't see that we're in a directional directional move just yet. It could happen today. If we fail up here, we're going to come back into range. So we're using range bound and breakout rules. This would be considered a potential breakout to the upside from this area of balance. Yesterday was a potential breakout. Today, another potential breakout to the upside. We really need to hold the weekly kickoff high here to stay in a new market state to the upside. That's why I'm giving this auction process a B. Here's the TPO chart from yesterday. Normal variation, extreme, IB extreme, no. Excess low, no gap close. The market presented as stronger than the S&Ps yesterday. Where are we now? Well, here's our overnight. Again, a new recent high in the overnight. There's a weak high on this new recent high in the overnight as well. Look at yesterday. The market didn't want to leave this recent high in the regular trading hour session. It had to close above it. Are we going to do the same today? We're going to be opening potentially with a gap from yesterday, potentially not. Where is this market going to find a base to take out this overnight high, if it does? So a little bit less reference to the upside in the NASDAQ than in the S&Ps. That's why it's getting a C as far as its auction grade. Look at gold. Gold had a nice pop after the numbers came out today, but still, the first three things that I've written on my notes for gold this morning are balance, and the third one is balance. We're in short time frame control here. We added 1,900 in open interest off this lower trend line here. 1,900, is that a lot? Maybe not. Is it inert? No. I think that there's some energy coming into this market, just not ready for the big move yet here. Take a look at the 30. Overnight inventory? No. Out of range? No. No gap. Value? Possible repair? I haven't touched gold in 3 weeks because I just don't like the opportunities that are. Here's a gap that we closed yesterday. I just don't like the way it is. What I'm focusing on, yesterday we had an opportunity against this trend line that I missed, but I'm focusing on these extremes for anything that I'm going to be thinking about doing in gold. I've got other things to do. So I don't have to sit and wait and do nothing here. Now, where do we open? Let's look at this. Whoops, no, that's not what I want. I want this. Gold. Where did we open, Fred? It's a double distribution trend day yesterday. Where did we open, Fred? In the single distribution, in the single TPOs, the single prints here. There's a really good probability, because we've already tested to the upper point of control here. We blasted through it because the numbers came out, but now we're back in here. probability states we can come back down and now check the lower point of control, assumed point of control in this lower distribution from yesterday. Fred has been very interested in what repair means and how to take advantage of it. If you tried to take repair here, you probably got smushed. But now we're back in that area that gives us license to look for opportunities at these points of control from the distributions from yesterday. The euro. Well, the dollar's come off the lowest it's been in over a month. We're still seeing upside structure here. Yesterday we added 3,600 in open interest. Volume has been creeping up as we've been pushing higher. So the upside auction is actually presenting as relatively healthy. I didn't really put a grade on this, but I'm going with a B minus. Because we did close above weekly kickoff high, but now we're showing signs of possible rejection. But we've got an inside extended trading hour range here. So the market could just be taking a little break and being magnetic around weekly kickoff level. Henry, you're looking at gold differently than I am. You may be absolutely right. I'm just talking about context and structure here. Whatever you're looking at that puts you in that trade, hopefully is part of your process and hopefully is a winning trade. But just stay in your process, Henry. Stay in your process. All right. Here's the 30-minute chart. Gap fill. Weekly kickoff, accepted above by close and time yesterday, now possibly showing a rejection. This weekly kickoff is pivotal. By pivotal, I mean, and I hate to do this, long above, short below. Because if it does become magnetic, you're going to get long, you're going to get short, you're going to get long, you're going to get short, you're going to get long, you're going to get short, you're going to get chopped up. It can chop you up. But it was supportive yesterday, now showing resistance. At the very least, it lets you limit risk. That's what I like about these levels. Here's the TPO chart from yesterday. A normal day. The initial balance, the first hour of trade, the range for the first hour remained the extremes for the entire session. It's a normal day. We're going to go with neutral. Now we're showing signs of potential gap fill from the previous day, the previous gap here. 10-year, another market that I wouldn't be touching. The market is still relatively centrally located between weekly kickoff high and weekly kickoff low. These are going to close in, I have a feeling, on price. We're going to get closer to some sort of bigger move as time goes on here. Just 2 days of indecision. We added 45,000 in open interest yesterday, which in the 10-year isn't that big. It's not inert. It's not moot, but it's not that big a deal. So, again, I believe we're in short time frame control. Where are we? Opened in range and in value. We had a pop to the upside after the PCE numbers came out. Looks like the market is trying to accept at higher levels. You might want to think about, well, I don't know. I just don't have a feel for this market right now. I mean, this low here is looking pretty good. And let's check out all right. A little profit taking perhaps here in the natural gas. Downside structure intact. The downside auction process today I was giving it an A minor today because we added another 20,000 in open interest on a down day below an important inflection level. Well, look where the market just traded to, right back to weekly kickoff low, finding potential resistance. Here's what happened here on the 30. See, these profit-taking rallies are vicious. Just vicious. And I believe that's what this is. I don't know that anything new came out as far as news about natural gas. So I'm assuming that we just ended up to a level here where shorts decided, you know what, we're going to take some money off the table, and pow, these opposite moves can be fast and vicious. Gives you another nice opportunity up here near this inflection level that has proven to be too expensive in the current time. All right, here's the TPO chart. So we opened in range. The IB is the low. I don't know if the opening range is. We have a poor low here. We have an unfinished downside auction. Another reason why I gave this downside auction an A minus this morning is because we don't see excess at the low. We see an unfinished downside auction at the low. This vicious, nasty pop, I believe, short covering, profit taking. So, alrighty. These market preps have been getting a little bit long-winded. Hopefully, we're leading us into Top Step TV. Good morning, Anne Marie. Any thoughts on the delta additions or subtractions on the ES? So, we have had I'm going to have to F-bomb this. You know what? Let's just look at it on the T4 platform. So, on Wednesday, we had overnight inventory that was considerably long, right, Anne Marie? I mean, the market created this big gap. The initial move that I was looking for is to the downside. I was looking for longs overall for the session, but I was short early in the session because of the overnight inventory. As we continued to push lower, Delta just got more and more negative, and the market seemed to be struggling to go to the downside. I was with some personal performance coaching clients, and I said, you know, I'm short here, but I'm not liking it. So I covered the short. Unfortunately, I didn't take a long until a little bit later into the session, and then we made money and make whole money because of the delta divergence that occurred. So we put in the low. It's a poor low. We have 3 poor lows in a row in the S&Ps. Okay, unfinished auctions. Although down here, you know, we are auctions die in excess. Well, this was big excess. So these weak lows aren't really worrying me that much because we're kind of in short time frame control here. We haven't seen any good delta that's been divergent in a couple of weeks, probably since before rollover. So when we couldn't see the market go lower and we kept seeing price continue to push higher and higher throughout the day, keeping delta pretty severely negative, that's when we say that there's a snake in the woodpile, or Elvis is in the room, because there's another presence in the market that is scooping up all of the little sell market orders that the retail traders will give them, and then they move it up and they move it up. So we get into make whole money. It's 2 o'clock. None of this has happened. Delta continues to decrease in value or increase in negativity. That's market orders, sellers hitting bids that are just not giving way. So I ended up just saying, you know what? I know it's make hope money. You guys are the ones that are calling the trades, but I'm calling this one today. So I bought one micro, and people were like, "What is the logic for this?" I mean, we're above value. We're at the high of the day. We're looking at the people were probably thinking, I think Hoag's lost his marbles because this is terrible trade location this late in the day. But we had the negative delta. We had the sense that there were short time frame, weaker hands shorts, our direct competitors that were stuck short, and they're gonna cover before the close. So we chat about that, and we chat about that, and we chat about that, and then pretty soon the market starts to run higher, and starts to run higher. It starts to run higher. So we made 10 points just because we recognized that there was negative delta. Oh, shit. Sorry. Yeah, you're right. You probably couldn't see my screen there. So this was yesterday. We opened with a big gap, right? We couldn't close the gap. Delta was very negative. So I got nervous in my short and said, I don't like this. I'm covering it. And as price continued to push higher throughout the day, you could see Delta getting more negative. And then the shorts would kind of capitulate. They'd go the other direction. So I believe that buyers came in here. Buyers piled in on longs here, longer time frame. You can see how the volume is so thick here. It's almost like they put a floor in. They said, okay, we're going to put ICE orders in. We're just going to keep putting buy orders in for as long as the short time frame traders will sell it to us there. And when they wouldn't sell it to them there anymore, they move those bids up. And then finally, the short time frame traders, the pea shooters like me, were so short, then they want to go home flat. There was only one thing left to do. They had to turn buyer, and they chased the market up. What is a little bit confusing, Anne-Marie, L period, and I can see this on this platform, L period, see, K period, we lost almost 5,000 of that negative delta in K period. L period continued to move higher, but it was negative delta in L period. So it's almost like the longer time frame traders accelerated their buying, and still continued to get short time frame traders short. M period was also negative, price going opposite the delta. So then yesterday we open, we end up with negative delta at the end of the day. I forget how delta worked yesterday, but the fact that we added open interest on higher value on negative delta still says that the auction process is good. Okay, so as long as we continue to see volume maintain, increases in open interest, and negative delta by the end of the day, the auction process is getting a B plus. Is that what I gave it today? A B plus? No, a B minus. A B minus. So the auction process is pretty healthy. It's a better grade than I got in high school. Now, with rollover in the past, we can start to depend more on that open interest and delta and volume information because it's not split between two months. Okay? I hope that answers the question you were asking, Anne-Marie. And I hope you have a wonderful, restful weekend. Okay. Vlad, group coaching link. Here it is. Group coaching is Monday and Wednesday at 12:30 Central. And I'll get the link for you here in just a second. So I have a keyboard here that sometimes works. I have to get myself a new keyboard. Copy the link, okay. And that should be group coaching. That's Monday and Wednesdays, 12:30 Central. Pete, my pleasure. No, I am not amazing. You guys are amazing. Yeah, kid germs are vicious. Yeah, I hope you feel better, Anne Marie. All right. I'm going to let everybody get down to business today. We've gone a little bit long here, and I usually like to be done so that people can have the opening. We're opening for about 1 minute old here. So I'm going to take my deep breath. I'm going to remind myself to stay calm, stay grateful, stay humble, stay centered, stay creative, and all of those things all at once. It's like trying to swing a golf club. There's 100 things you have to remember, and if you succeed on 20 of them, you're a genius. But trade well today, preserve capital. We'll see you tomorrow. See you Monday morning for the prep at 7:45. Blessings to you all. Be kind to yourself. Be kind to others. Pray for peace. Please, we need peace. Have a great weekend.